Imagine two companies reporting their profits. One says they made 50 million naira. Another company also says they made 50 million naira. But here's the real question. What if both companies calculated that profit using completely different rules? Then those numbers would be meaningless. And that is exactly why the regulatory framework for financial reporting exists. Welcome to the Storyteller Accountant, where accounting is no longer boring, but transformed into stories you'll never forget. Today, we're uncovering something most people never think about: why financial statements must follow strict rules, and who creates those rules. Imagine a company called Alpha Manufacturing Limited. At the end of the year, the company prepares its financial statements. Now, different people are interested in those reports. Investors want to know, is the company profitable? Is the company financially stable? Can it repay its loans? So, Alpha Manufacturing publishes its financial statements. But here's the problem. What if every company prepared financial statements however they liked? Investors would never be able to compare companies. It would be complete chaos. One company might recognize revenue today, another might recognize it next year, another might even hide some expenses. And that's exactly why financial reporting must be regulated. What financial statements actually are. According to IAS 1, Presentation of Financial Statements, now aligned with IFRS 18, financial statements are a structured representation of the financial position and financial performance of an entity. In simpler terms, financial statements tell us three key things. 1. The financial position of a company. 2. The financial performance of the company. 3. The cash flows of the company. This information helps investors, lenders, and other stakeholders make important decisions. The main components of financial statements. To achieve this objective, financial statements contain several key components. 1. Statement of financial position, also known as the balance sheet. It shows assets, liabilities, equity. In simple terms, it shows what the company owns and what it owes. 2. Statement of profit or loss and other comprehensive income. This report shows revenue, expenses, profit or loss. It tells us how the company performed during the period. 3. Statement of changes in equity. This explains how the owner's interest in the business changed during the year. 4. Statement of cash flows. Profit does not always mean cash, so this statement shows cash inflows, cash outflows, how cash moved within the business. 5. Notes to the financial statements. These provide detailed explanations behind the numbers. Think of them as the story behind the financial reports. Why the regulatory framework exists. The regulatory framework ensures that financial statements, 1. Follow the same rules, so companies can be compared easily. 2. Maintain high quality, so the information is reliable and trustworthy. Without this framework, investors would struggle to know which companies are actually performing well. Classes of regulatory framework. In many countries, including Nigeria, financial reporting rules come from different sources. 1. Laws of the land. Examples include Companies and Allied Matters Act, CAMA, Security and Exchange Commission, SEC, Rules and Regulations. 2. Accounting standards. These include international standards such as International Accounting Standard, IAS, International Financial Reporting Standard, IFRS. These standards provide detailed rules on how to report revenue, how to measure assets, how to recognize expenses. Transition to the conceptual framework. But here's something interesting. Even though accounting standards are very detailed, they cannot cover every possible business transaction. And when accountants encounter situations not specifically covered by standards, something else becomes important. Something called the conceptual framework for financial reporting. And that's exactly what we'll explore in the next video. If you're enjoying these accounting stories, subscribe to the Storyteller Accountant, where every number has a story. And in the next episode, we'll uncover the hidden blueprint behind all accounting principles, the conceptual framework.